Good evening. It's Vijay here. Welcome to a weekend commentary of 8 June 2025, uh, where we discuss about the RBI's gamble. Now, on Friday, I was expecting RBI to cut 50 basis points on the repo and another 50 basis points on the CRR at best. But RBI has cut 50 basis points as far as the repo is concerned and 100 basis points on the CRR, which I was not expecting, honestly. Uh, Now, what it has done, in my opinion, is it has taken a very big gamble on the growth because RBI has decided that, inflation is down. So, therefore, it makes sense to reduce repo rate as well as CRR, which means it will bring into huge money, 2.15 lakh crores worth of cash will come into the system. So that may give a fillip to the growth. So if you really look at what RBI has done is something unprecedented, which means something it has not done in the last 5 years. The last time RBI made such a significant CRR cut, this 100 basis points, was when it slashed the ratio by 1% and repo rate by 75 basis points when the COVID-19 crisis was there. This time they have reduced the repo rate by 50 basis points and slashed the CRR ratio by 1%. So we are almost staring at emergency measures. Now, prior to that was in September 2015 when global markets, including India, were crashing. So that time also they had done something similar to what they have done yesterday. Now, if you look at it, now globally markets are not crashing. Overall, Indian markets are not bad, and the macros are not bad. Macros are improving. So now this rate cut should do many good things for corporate India as well as the saver as well as the person who have taken loans. So EMIs will come down significantly. Savers will get affected. Corporate India, which borrows, will have their borrowing costs significantly lower. But the biggest problem, before that, let's see what happened in COVID time. When they cut the interest rates, the market went on and on and on. This was 2020 March to September 2021. However, the major difference here being that only India has done in such a big manner. That time, globally, people were fighting COVID by reducing interest rates. So, a lot more liquidity came into the global monetary system, and therefore, globally, all markets went up, and so did India. That can be one argument. At that point of time, the fundamentals were very poor. Today, the fundamentals are not poor. So we should expect the market to go up. There is very less chance of the market to come down and stay down, even if it is down. As I said yesterday, the market has underestimated the impact of RBI's policy. And while day-to-day fluctuations may happen because of various reasons, including Trump's machinations or Trump's tantrums, but by and large, one should expect the market to have a steady uptrend. But this is where the problem is. Now, a few months ago, Uday Kotak said that he's worried that India's young entrepreneurs are focusing more on stock and MF trading than on building companies. Uday Kotak should know because he's at the epicenter of the financial capital, and he has seen it all for the last 40 years. Now, one way of looking at this cut is okay, the companies will now start doing capex, and therefore India's growth trajectory will be steady, which means the stock market's growth trajectory will be steady. However, if what Uday Kotak is worried about continues, which means entrepreneurs are going to use the money to do stock and MF trading, mutual fund trading, than on building companies. If they start doing this, this 2 and odd lakh crore cash which is coming into the system will leak into the system where people will begin to speculate, both the retail investors, the people who are borrowing at the retail level, and the large corporates. Instead of putting money into the system into their system, they are going to speculate. So either the market will go up steadily or the market will go up very volatile on an uptrend, and then maybe it will peak out and then it will crash. So where are we today? This is the Nifty chart, which is this is Friday's Nifty chart. Sorry, this is a daily chart. This is Friday's big movement. Now this pattern is called the flag and pole pattern. Flag and pole pattern is a very powerful bullish pattern. Should this is the flag. This blue rectangle is the flag, and this blue line is the pole. Now, if this flag breaks out on top, it generally means it will go up to this level. That means the size of the pole. So we can expect a significant rally in the market in the next few weeks and months if this is a good flag and pole pattern. Now, if you look at Bank Nifty has already broken out of the flag and pole pattern. Bank Nifty has broken already out of the flag and pole pattern. So it looks like Nifty also will break. Now, on Friday, a lot of people were still skeptical. People began to discuss that RBI knows something bad is happening in the economy. So therefore, they have done this bazooka. Now, in my opinion, what RBI has done is right. This is the only way you can kickstart the economy, what we call pump priming the economy. As far as the monetary policy is concerned, fiscal policy also have to dovetail the monetary policy. Whether fiscal policy will dovetail monetary policy in terms of giving impetus will depend on the finance ministry. We don't know that. But simply by only RBI, if you look at it, it can create havoc in the positive sense in the market, which means market can shoot up if the corporates are going to focus on the markets rather than their businesses, or markets can go up steadily if the corporates begin to focus on their businesses rather than the markets. Either way, it's a win-win situation for the bulls. So therefore, I am going into this, after the RBI policy with very much high optimism. And I think in the next 3 months, or let's say next 6 months, things will be much, much better on the stock market front, independent of what happens corporate front. So therefore, there is, in my opinion, there is no need to fear. There is no need to get, jittery and think of some conspiracy theories like, RBI knows something bad is going to happen. So therefore, they have increased they have reduced the interest rates significantly. In my opinion, RBI has not done that. They have thought it through. It is now left to the corporate India as to what they will do. If they are going to push this into the stock market, then you'll have a very volatile upward trend. If they do what they're normally supposed to do, push it into their companies and add capex, then it will be a steady uptrend. Both ways, it's a win-win for the bulls. So I have been on the bullish side for a long time. I will continue to increase my bullish position wherever possible. So these are my thoughts. Please note, I am not a SEBI registered advisor. Please consult your financial advisor before taking any step. But I am feeling that we will see something fantastic happening in the next 3 to 6 months. So here I sign off. Thank you for joining me.